What's up guys, this is Chris, and in this video I'm going to talk about how many gains I just made today. Let me just look at my Robinhood count and oh my god. What's up guys, this is Chris, welcome back to my channel. Today's video we're talking all about the big drop in the market today with a lot of tech stocks in particular and other high growth type of companies that have been doing well over the past year have taken a big hit. So we're going to discuss why that is, and I'm going to give you 10 stocks that I believe you need to watch or even buy into this madness here today and over the course of the coming days and weeks potentially. So there are two big reasons why the stock market is going down today. The first is that interest rates have been going up quite dramatically over the past couple of weeks. All right, in particular, we're talking about the 10-year treasury notes, right? Bonds. Those have been going up huge, relatively speaking. We've gone from like 1% to almost 1.4% here today. There's talk of 1.5%. And so the question is whether or not inflation is going to be much bigger, much faster than we expected, and that the Federal Reserve is going to cut back on its easing policy. And so when there is not as much money being printed and all this liquidity, there's going to be more of a concern whether or not people should continue to buy stocks as incessantly as they have been. People have been flocking to high growth stocks because there hasn't been a real place to put your money in. If you put your money in a savings account, you put your money in bonds, you would barely get any return for that. There are going to be some people that look at this situation and think, okay, I might as well start putting some of my money into these bonds. If I could get 1.5, maybe it's going to be 2% in the future, 3% in the future. And these high growth stocks have already gone up a lot. Maybe I should just take some profits and put it somewhere safe. The other thing is that the cost of borrowing for those high growth companies is going to increase over time, and that could be a disincentivizing thing. It's still early innings, right? But there are going to be people that are trying to, be proactive and get ahead of it. And so besides the interest rate situation, the second thing here is that a lot of these growth names have been going up dramatically over the past month alone, right? Or year to date. Some of these stocks have been up 20, 30% in a very short amount of time. And last year, those stocks, some of them have gone up hundreds of percent. At the end of the day, if stocks are constantly at all-time highs, eventually going to run out of buyers. That happens throughout history. So it's perfectly normal for some stocks to take a pullback right now, and we're going to look at some of them specifically. So the first stock we're going to talk about here is ICLN, okay? This is a clean energy ETF. It's made up of a bunch of really great holdings. I put up a list here for you guys to see them. There's things like First Solar, Enphase, Next Era Energy. All these are really great names in themselves, and you can also consider them. But this is a really great ETF for you to just buy into for a long-term hold, and you'll be able to capture the growth in this space all in one package. So this is one that I highly recommend. It's been on a tear, and finally it's getting toward a good buying opportunity here. Continuing with that theme, number 2 is First Solar. So I want to specifically focus on this one as part of that ETF. And First Solar is a very profitable solar company. 27 forward PE thereabouts, might be lower as of today. Along with the other companies in the solar sector, last year was a big hit and they did huge double-digit growth. The coming year, analysts expect them to be pretty flat or a small amount of growth. I think that is understated, and I think you have to factor in that this administration is definitely going to push clean energy. They're going to push infrastructure. So I think that there is going to be continued upside in this stock and in this sector as well. The third stock on this list is Tesla, a fan favorite. And I've been quite critical of Tesla in the past, but I think that after a big move, we needed a pullback in this stock. And from around $900, it's dropped to almost $700 here today. And if it gets to in the 600s, I think you definitely want to consider buying it. No matter what, there's going to be Tesla fans out there, and I don't think that Tesla will crash and stay crashed. I think there's just too many people that believe in the company, too many dip buyers, and ultimately, after every pullback we've seen in Tesla, it is a buying opportunity. The RSI stunningly right now is 34, which is to my numbers here. By the way, if you want to use Webull. This is a great platform for you to do analytics and look at statistics and whatnot, but this is one of the lowest RSIs in Tesla since last year in the pandemic. So relatively speaking, this is a good buying opportunity. Okay, and by the way, if these are good companies, you want to take advantage of weakness, and if the fundamentals haven't changed and you're a long-term investor, this is definitely a good moment in time. The fourth stock here is going to be similar. It's going to be Nio. Okay, Nio is the premier company in China. It's not close to Tesla yet, but it's up there in the higher tier of EV stocks. They have tens of thousands of deliveries a year now, and they're really pushing that number up per quarter too. This is a company that is also actually getting towards profitability. Nio has obviously been a rocket over the past year, and it reached a high of around $60 per share, but it since has gone down about 20% here. I think that this could be again a buying opportunity. I personally would like to see it in the 40s. Stock number 5 is going to be SE. All right, this is my favorite, right? C baby, and I think that the C squad definitely wants to start adding shares here because we had a huge 10% drop here today, and I think that SE is in the perfect place right now. It's doing phenomenal growth over the past year. They did around 100% growth. Next year, analysts expect over 50% growth. Shopee is as popular as ever. Free Fire, their #1 mobile game, is as popular as ever, even despite the pandemic, kind of receding, especially in Southeast Asia. The pandemic was never really that big compared to the Western world, but nevertheless, mobile gaming has been doing phenomenally. Southeast Asia, there's tremendous growth in the internet economy. So if you want to start building a position here, if you're not already in it, I definitely endorse it. And if it gets to 220, okay, I am going to be loading up on call options. Okay, I have enough shares, 150 shares here is 20% of my portfolio, around $40,000. But if it gets to that level, I am going to be buying call options because I think at that point, it's definitely a buy. Every time it gets to around this 50-day moving average, I'll have the chart right here for you guys to see. It bounces from there very reliably. And I think institutions are going to keep loading this stock up because it is a 5 to 10 year stock. Stock number 6 is going to be Adobe. Okay, this is one of the premier software companies, consumer products, enterprise products, and this is a company that has been doing profits like nobody's business. All right, $5 billion in income because their margins are super high. They have a big subscription model. It's a very safe business model, and the profitability next year is going to increase even more. You have the forward PE is 33 or so. This is good in the software space. It's like a staple at this point. And the stock has been trading sideways for quite some time. I think that the selling in this particular stock might actually not be as much as we think because it's already gone down for quite a sustained amount of time. Adobe is definitely a good one for a long-term hold. Stock number 7 is going to be Apple. It is around $126 here today. It's been downtrending since the earnings, despite those earnings being crazy. I mean, Apple did $100 billion in revenue that quarter. iPhone sales have been the best they've been in a long time. 5G is just beginning, and I think those sales are going to continue to grow and grow. And you have the subscription business firing on all cylinders as well. You can definitely buy into. It's definitely, again, a long-term hold. Everyone loves Apple, very secure, solid company, $2 trillion value, and you're getting it at a discount right now of around almost 10% from the all-time high. Stock number 8 is going to be GNOG. Okay, GNOG. This is an online gaming, aka gambling company, and they're only in about a handful of states. They're really only operating in New Jersey right now. That's the main source of the revenue growth. They're also in Michigan and one other state. I'll put it up here. But the point is that this company has been doing insane growth over the past year. The past quarter they did around 90+%, and for the whole year they did well over 60%, and estimates for next year are still going to be great, and they're expanding into multiple states. The company is already churning a tiny profit, and their price to sales ratio is a lot more attractive than DraftKings, even though they have about the same amount of growth. And really, if you think about it, if they're generating all this revenue from just one main state here, and they're rolling out gradually over several states, and the legalization of online gambling is only going to grow, then this stock has a tremendous amount of potential. And at $15 per share, $16 per share right now, I really don't know why it's so overlooked and undervalued for this high amount of growth. So, this is your opportunity to buy more, and I personally have 300 shares right now. Stock number 9 on this list is GRVY, and GRVY Corporation is a gaming company, South Korean company, that has a very popular franchise of games known as Ragnarok Online. They have many games based off of that franchise and that IP, and they have done incredible growth over the past year, around 60%. And this is, a gaming company that does 60% growth, that trades at a price to earnings ratio of 21. It doesn't really make sense, and it's so undervalued, it's crazy. Okay, the thing is that a lot of institutions don't own this stock. You see here on FinViz, it says that less than 10% of the shares are owned by essentially hedge funds, right? And the rest of it is ordinary retail investors and insiders who own around 60% of the company, which is really huge amount. So they obviously believe in their stock, and at this valuation, I say you definitely have to buy some shares here. Some people might say, oh, they only do this Ragnarok game. They have 10 different mobile games, basically on the same type of characters and whatnot in the story. But their popularity speaks to itself. They're rolling out more mobile games constantly in Hong Kong, in Asia, in Taiwan, in Singapore. They're putting out new games throughout the rest of 2021. They have a big pipeline. There's like 5 to 10 games. They also just got an NBA licensed game that's going to come out. They have a Chinese Basketball Association game that's going to come out. So they are working on diversifying away from just Ragnarok. As much as I love that game throughout my childhood, but you have a stock here that I think is very interesting at this valuation. And stock number 10 here is AMD, okay? AMD is one of those that has a meteoric rise last year. One of the biggest semiconductor companies. It's gone from, the sad days when this was a $2 stock when I first started investing in the stock market many years ago. And now it's 80 something dollars here today. And I think it could definitely keep going. This is a company, again, that has 50% revenue growth. It's done that consistently year after year. And with their potential acquisition of Xilinx, I think this is going to only become a bigger behemoth in the computing world, in the gaming world. This, and artificial intelligence as well, right? This stock has a lot going for it in terms of long-term trends. And a 4P of 33 is actually not that bad, right? Considering that amount of growth. And one of the best CEOs in history, in Lisa Su, I think you definitely want to consider the stock if the market continues to pull back. All right, guys, that's it for this video. It was not an inclusive, buy all these stocks at once type of video, by the way. But these are definitely some you want to consider buying right now, and definitely more so if the market continues to pull back and you get a better opportunity. Because at the end of the day, these are all long-term stocks with high quality growth or high quality balance sheets or a lot of things going on for it. And they've been going up and up and up, and finally you're getting a chance to buy them at a lower price. And when the market gives you discounts, you got to take them. Let me know your thoughts in the comments down below if you are buying any stocks into this weakness in the market. And I will see you guys in the next video. We got a lot more content coming up. And by the way, our channel just got to 4,000 hours of watch time, which means I'm finally able to apply for monetization for YouTube. So I'll be able to continue making great content for you guys. And thank you for all your support up till this point. See you in the next video. Take care and invest responsibly.